Good afternoon, ladies and gentlemen. Very happy to have you all here, and we are pleased to present the first annual results of Cochin Shipyard Ltd. After we have gone public. And you have the results with you already. And as we are speaking, probably in the next 2 to 3 minutes, an investor presentation is also being uploaded. Essentially, we have a turnover of 2,355 crores, which is a 14.4% increase on a year-on-year basis. We have PBT at 604 crore, which is an all-time high, and it's 22.5%. We have a PAT at 396 crores, which is 23.2% increase on a year-on-year basis. And personally, as CMD of the company, I feel pleased with the results here. The market has not been so great, but because of our portfolio and the efficiencies we have brought in certain spaces, things have generally looked well. I'll try to also give you a feel of where this money has come in from. But from the profitability point of view, like the Q4 has been excellent. You could see that the Q4 per se, there's been a strong jump. But then, as I always convey to you, kindly do not look at a quarter-to-quarter basis, even though I'm tempted to put it across on a quarter-to-quarter basis this time. But then that's not the logic. So what has actually happened is, like, we have done fairly well on the shipbuilding side, and especially on the aircraft carrier project which we are executing. You are generally aware that the aircraft carrier project is on a fixed cost and a cost-plus basis, and our profitability mainly stems from the fixed cost part of it. We have been able to do fairly well on that space on the quarter, and that is why you are seeing that sharp jump in the quarter. Or I should actually put it the other way around. Like previous quarter, like 2017 Q4 was actually if you really look at it, the profitability was not up to our normal levels. So that is why you see that big difference. We are now back to a steady course on the profitability on the aircraft carrier on the fixed price part of it. The most satisfying part has been on ship repair. A 623 crore turnover has come in the financial year. And I would like to convey that this is very important for us, because 623 crores has come in without a single large project like the aircraft carrier Vikramaditya, which we had in the previous financial year. And to take you back to the previous financial year, when we had 553 crores of turnover from 543 crores of turnover from ship repair, 243 crores came from one particular project, which was INS Vikramaditya, which we had at that point of time. So if you really take out INS Vikramaditya, we were somewhere around 300 crores, and if you try to put in a substitute project for that period, you should think that 2017 ship repair was somewhere around 350-360 crore. So 623 crores of this year should actually be compared with that, and that's a significant increase. The good part is significant part of it. Out of 623, just a minute, I have Mr. Vijay Jose, my General Manager Finance, also here. Jose, about 400 crores has come in from the defense part. Yeah, defense part. So out of 623, about 400 crores has come in from the defense part. We have handled a lot of defense vessels here. So things have been good. So ship repair did exceedingly well. Shipbuilding, the fixed part of the aircraft carrier did well. So all in all, generally satisfying. And outlook for the next year, again, we feel confident. A robust order book position. Today, what we have signed and sealed is about 2,100 crores. But practically signed and sealed, I would put it that way, which is the ASW corvettes of the Indian Navy and the Ministry of Home small boats, 10 numbers of small ro-ro vessels for the Inland Water Authority of India. So that will add up to another about 5,900 crores. So say about 8,000 crores is already in the next 3 months, 3.5 months, you'll see 8,000 crores signed and sealed. And then the big one, the phase 3 part of the aircraft carrier, we are getting into the final round of discussions. All should go well. We don't see any grave concerns over there. And by end of the calendar year, latest by end of the fiscal year, we should have those contract, the phase 3 contract also signed and sealed. And as you have been constantly tracking, that part, including the fixed price part in the phase 3 contract and the cost plus part in the phase 3 contract, should be a safe 7,000 crore levels. So all in all, again, we should look at 14 to 15,000 crores of order book on the new building side of it. Ship repair, the good part is, again, this financial year would look extremely strong. I can convey that again, not to be really quoted outside, but as we are talking today, the INS Vikramaditya has been docked in the shipyard today for a major docking. So this year we can safely project more than 800 crore of turnover. And we have the INS Vikramaditya, we have a DRDO research vessel already contracted. We have the Sagar Bhushan vessel of ONGC. So this year looks good. All in all, the year that's gone by, I'm happy and pleased. The coming year should be robust and good. The only flip and the negative we have had is we had a very bad accident in the company, which shook us a little bit, or I should say shook us badly. We have come out of it. That is the bad thing that has actually happened in the company. On the capex plans, everything going on as planned. There are 2 major capex. The International Ship Repair Facility, 970 crore investment. We signed the contracts last year. We started work last year in October of 2017. And that's going on well. Simplex Infrastructure is executing that project. And the next major project, and the most important project, was a new dry dock. 1,800 crore is the estimate for that. And the civil turnkey part of it, civil and the machinery, electrical, that's a turnkey project. 1,300 crore was the estimate. And we are happy to report that we have got Messrs. Larsen & Toubro as the company to execute that work. The contract has been awarded to Larsen & Toubro, and the first round of kickoff meeting has happened on the 16th of this month. And we expect to lay the foundation stone anytime in the next 10 days or so. So the 2 major projects are going on well. All in all, we have got significant support and goodwill from the Ministry of Shipping. We are talking about new things. Mumbai Port Trust, ship repair expansion. The MOU has been signed. Detailed discussions have been held continuously. We expect to sign the agreement shortly, and early part of September we are hopeful of starting operations in Mumbai. Kolkata activities, the new joint venture company, HCSL, Hooghly Cochin Shipyard Ltd. It's all the company incorporation and all the legal formalities are clear and done. The DPR for the investments is in the final phase. The DPR preparation, like Messrs. Kitco, a consulting company, is doing that, and we hope to put our approval on the DPRs in the next 2 weeks or so. And 18 months is the time we are putting in to complete that facility, but hopefully we should be able to do it a couple of months earlier. So HCSL in Kolkata would come up very well. Even in Kolkata, the MOU with Kolkata Port Trust has been signed. We are just wanting to do Mumbai agreements first and then follow it up on similar lines in Kolkata. Kolkata is not going to be bringing in much revenues initially, but then I should say it's a little bit of an experiment with practically no downside. That is what we are trying to do in Calcutta. So this is what the shipyard has gone through and is going through, and a little bit of painting into the future. Jose, am I missing something here? Like have I covered generally? And otherwise, industrial relations front, everything generally okay. Pay revision for officers and supervisors have already been implemented. The monies have been transferred. The pay revision for the workers, which is a settlement that is in, I should say, it's getting into the active phase of the discussions now, and we hope in the next 4 to 5 months we should be able to conclude that settlement also. So generally, things going steady. I could convey that the kind of profitability we are seeing, fairly comfortable EBITDA margins of, I'm talking EBITDA margins without the other income, then it's around a 99% odd, but if you bring in the other income, we are around a 27%, and that other income part will dip a little bit as we move forward, because the cash we have is going to be expended for the investments. But the EBITDA margins at the minus the other income is going to remain steady. I think we will sustain this part. On the top line, we can safely, as I've always been saying, approximately at 12% year-on-year growth rate is possible. Profitability PAT levels of around a 16% should be comfortable. So this is the view from the shipyard, and I'm all yours to take questions. The floor is open.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time, they may please press star and 1. The first question is on the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon, Sandeep.
So my first question is pertaining to our shipbuilding segment. We've seen a very strong jump in margins, which you clarified in your comments that it was due to booking revenues on this fixed price portion of IAC.
Correct.
And, we'll have revenue contribution coming in from other shipbuilding projects that we are undertaking right now.
Yeah.
Going forward, if I were to look at the margins in this particular segment, how should one look at it on a normalized basis?
Yeah, that's very, very correct. Because as we move forward, if I start from compared to Q4 of 2017, like the IAC fixed price part was only about 60 crore rupees in that quarter, whereas we could do the IAC fixed price part of around 183 crore in the latest quarter. So that kind of a fixed price part, we should be able to carry forward this financial as we move forward. But we will have a substantial part of the shipbuilding revenues also coming in from the other shipbuilding projects. So you could see a little bit of downward movement on the overall percentages, while we'll still have a steady part coming in from the IAC fixed price part as we move forward. What comes from the shipbuilding side will not bring in, naturally will not bring in that kind of revenues. So to answer your question of what kind of normalized figure will we see, Jose, do we have a projection on the shipbuilding part? What kind of
percentage we are not correctly mentioned, but since the commercial segment will be more, then the margin will
Can I give an project an average level that is going to come in?
Percentage.
On a EBITDA level in shipbuilding?
It will be around 20 level, 19, 20.
Average.
Average.
An average normalized level, 19-20% we should be able to see.
All right. Okay. And so secondly, on this revenue booking of the ASW Corvette order, as in it typically starts a year after you book the project first. So by when is it likely to get finalized? As in by when will it?
We have been given to the recent interactions I had with the Navy. They've said like we should be able to seal this in 3 months' time.
Okay. So
contract
should start flowing from financial.
Revenues will start flowing even much later. 18 months. Yeah, you should push it at least in 18 months from that point. Because that's when because there's a design phase to it. While we will get cash in once you sign the contract, revenues will not get booked. So the revenues will come in only when we start the steel cutting. So you should put it across that 18 months from. So from now, let's put it at 21 months from now. I can update you as you move forward, but should take it at 21 months from now.
Okay. And so on the ship repair side, if you can highlight, you did mention that revenues can see a big jump up to 800 crores in financial year 19.
Yeah.
So how would this be split between the standalone company, or will there be any contribution from the new ventures that Mumbai Port Trust, Hooghly, Kolkata, have you factored in this number?
Hooghly and Kolkata are not reflected. Mumbai can bring in about 75 crores, but I put in my presentation, which we have, Kala, have you uploaded the presentation? See, we have mentioned 800 plus, and that has not been factored in. Mumbai has not been factored in. So we are looking at a significant jump here. 800 we will do, 800 levels we will do directly from Cochin itself.
Got it. And so lastly, one or two clarifications I needed on the numbers. This 12 crore, towards the pay commission provisioning, has it been factored in the 4Q number, or it is yet to be factored in?
It has already been factored.
Sorry, so that employee cost includes that 12 crore number.
Yeah. What is 12 crore mentioned?
Which was this 12 crore you're mentioning?
It is given in the notes to our accounts that there is a 12
that has been factored.
It's been taken. Okay.
That has been factored.
Okay, and secondly, on the other current liabilities in the balance sheet, we have seen a very big jump of about 700 odd crores. If you can what the major contributors to that 700?
I'll tell you, the main reason is that we are firstly advanced from the Indian Navy for IAC. That has gone up considerably. Plus, we have received a major advance amount from Andaman. They have given around 400 crores as advance.
See, Andaman Nicobar vessels, we are building 4 vessels. On all the 4 vessels, we actually received 60% of the payment.
Thank you. Mr. Tulsian, may I request you to join the question queue for any follow-ups, as we have several participants waiting for their turn. Also, participants, if you wish, I request all participants to limit their question to 2 participants. If you have any questions, you may join the question queue for any follow-ups. Thank you. The next question is from the line of Jonas Bhutta from Phillip Capital. Please go ahead.
Hi, sir. Congratulations on a very good set of numbers.
Thank you.
So, a couple of questions. So, if I get it right, in the morning on a media interview, you mentioned that you need to deliver, or you plan to deliver the IAC by end 2020.
Correct.
So, that sort of leads you to almost 8,000 crores of execution in the next 24 to 30 months. Yep. But while giving your guidance for the next year in terms of top line, you mentioned 12%. Is that understanding correct, sir?
Again, there's more of a closed meeting. I should take it this way. And when I'm talking to the press, I have to talk October 2020 for the IAC, which is the date that has been conveyed by the MOD and by the Navy. But as I've always discussed with my friends in the segment when I'm talking, we always say like this could be, let's say, a plus 6 months pushed, and which everybody in the Navy and MOD also understands. But then there are reasons when we are talking October 2020, and it's so you should take it that this around a early part of 21 is what we are talking. Now I do get your question. The balance part, how does it get spread out? See, I should say that how it would work out is like see there is about a 3,000 plus crores of the fixed price part which should come in phase 3, and then there is the other part is the cost plus part. Now the cost plus part, to put it very crudely, like you'll have about 1,500 crores of what we call tests and trials. So when you're taking the ship out for testing and trials, there's a lot of expenditure right from fuel and onboard. So that's around 1,500 crores. And then there is something called B&D spares, base and depot spares, which is also been factored at around 1,500 crores. And these are all estimates by the Navy. So now so this broad part, let me just cull it out into these 3 main portion, a 3,000 crore on the fixed part, a 1,500 crore at B&D, a 1,500 crore at tests and trials. Now, see, this test and trials and B&D, it's not fully under my hand, like as we move forward, if the Navy, because this B&D spares is really not going on the ship. It goes to a base and depot, which the Navy says. And the Navy plans it in a particular fashion, When they take the ship, they need a certain thing already in let's say, in Bombay or in Karwar. And certain other things, they want it at a point of time. So we are actually planning it a little bit conservative at this stage till we get clear directions of how they want us this B&D spares to be positioned and how exactly the trial part of this 1,500 crore will unfold. It will definitely unfold during the trial phase. But again, we have conveyed it clearly that 2021, when we deliver the vessel, that doesn't mean that the vessel goes straight into operation. Then there is at least 18 months of what is called aviation flight trials, when planes come in, the aviation crew come in, and that kind of a phase happens. So there would be expenditure in that part also towards the trials. And this is also to be factored into what is called this phase 3 contract. So the money spent will actually go a little bit, or you can safely say, another 12 to 18 months beyond the 21, let's say around April, May delivery phase. So that is why we're just stretching it a little bit beyond that phase, and that is why you're seeing this little bit of a conservative approach from our side on this.
So effectively, nearly 4,000 crores of order book will be recognized only post-delivery.
May not be 4,000. So that this split we will know as we see. Now, the ship is going to go out to sea early part of 2020. That is for sure. So by that time, by end of next year, exactly how this that 4,000 crore is going to pan out. And I don't think that is going to be beyond delivery. There will be a fair part coming in before delivery also.
Okay. So, and the second question, it's a mixture of two. So basically, sir, what did you mention as the order inflow in FY18, sir? As in what has been booked as part of your order inflow in the current year, FY18?
See, what I said is like today what we have already from whatever we have signed, so that is phase 2, remaining part on the phase 2 on the IAC and the other vessels we have, it is 2,100 crores.
So these are new projects signed in FY18?
No. Let me clarify. These are all the remaining part of the contracts which we have signed earlier, 2,100 crores. What we are going to sign now, it will be the ASW Corvettes and the Ministry of Home contract, which will add up to about 5,900 crores.
Got it. So, and lastly, if you can share the revenue contribution from IAC broken up into fixed price and cost plus.
For the full financial year, just a minute.
Right. And also the defense and the non-defense revenue as in?
The IAC, for FY18, the fixed price was 552 crores and the cost plus spot was 890 crores.
And the breakup between defense and commercial, as in the non-defense ship repair?
Overall part, we are 27%. No, ship. You're wanting it between defense and non-defense on the ship.
Yeah, within. Yes, sir.
So it is 70. Yeah, percentage wise.
Shipbuilding total 70%.
Just a minute. Just put that as a shipbuilding percentage. You want it as a percentage of the shipbuilding turnover, because between shipbuilding and ship repair we are a 73-27 this time.
And within shipbuilding 83-70.
Within shipbuilding it is an 83-17. So 83% is come from defense.
Got it. I'll come back in the queue. Thanks for answering my questions and all the very best.
Thank you. The next question is from the line of Giriraj Daga from KM Vasaria Family Trust. Please go ahead.
Yes, sir. Two questions from my side. First, on the margin side of ship repair, so we had this year margin was relatively lower compared to last year, because last year we had the Vikramaditya and that's why margins were relatively higher. But you just mentioned in the beginning that this year also we had docked Vikramaditya. And we are looking at target of about 800. So should we assume a similar kind of margin what we achieved in FY17 on the repair side?
That's a very, very difficult question. I think the Vikramaditya margins would be pretty good.
Okay. And the size is also more or less similar compared to what we had achieved last time?
It's almost double.
Okay, it's almost double. Okay, thanks a lot. Second question is on our credit provisioning. This time the number has jumped up substantially to 41 crore. So the first question, does it include anything on the related to the fire what we had, or the accident what we had? And the overall the numbers looks higher. So if you can explain some light there.
Can you explain this? 41 crore on the provisioning part.
Yeah. Provisioning is basically that fire, there's a provision of around 12 crores because of the fire.
Okay.
Because I'll tell you, the estimated damage for the fire is around 18.5 crores.
Okay.
But we have insurance claim against that towards 15 crores.
Okay.
So the balance is only 3.5 crores. Plus, there is an LD provision in the contract, because now there is a delay in the repair of that ships. So LD of around 9 crore also be provided.
Now, what we are hoping and what we are discussing with ONGC is, we expect LD will not be applied, but as a prudent measure, we have actually put the provision for LD.
So this entire 41 crore, larger part of it is related to that ONGC contract?
So this will add up to 12 crores. So about 9 crores is the LD part, and about 3 crore is coming from the damage minus insurance part.
Correct.
The balance.
Then the remaining is that we have a ECL, that is expected credit loss policy, that provisioning for debtors. Our policy is that first year, if the debtors are remaining outstanding for 1 year, we will provide for 5%.
Okay.
And if it's more than 2 years, it is 15% cumulative. And on the third year, we will provide the remaining 85%, 100%. So that is the policy for provisioning for debtors. Plus, on a case-to-case basis, we will review the debtors every year. And in the case of any debtors, if there is a specific letter or anything that there is any doubtful regarding the realization, then we will provide fully for that also. So similar provision is almost around the 30 crores this year.
Thank you, Mr. Daga. May I request you to join the question queue for any follow-ups? We have the next question from the line of Harish Biyani from SBI Mutual Fund. Please go ahead. Mr. Harish, your line is unmuted for questions. Please go ahead. Seems there's no response, so we'll move to the next question. That is from the line of Nirav Shah from GC Investments. Please go ahead.
Who was that?
Nirav Shah.
Nirav Shah.
Nirav here from GC Investments, sir.
Yeah, please.
Sir, congratulations on great set of numbers. So two
Thanks.
questions. One is any large order pipeline that we foresee for the next 12 to 18 months. We've got one which was COVID. But for the next 18 months, any big orders that we are targeting?
On the shipbuilding side, no.
Shipbuilding, yeah. No. Okay. And second question is, sir, our understanding was that the ship repair potential till the new facility comes up was close to 550 to 600 crores.
Yeah.
But we've already done 640 odd crores and we are guiding for 800 crores on the current assets.
Yeah.
Excluding the Mumbai and Kochi and Hooghly.
Correct.
So any challenges you see in this and I mean, can you just share some thoughts that what changed from the 600 crore potential to now targeting 800 crores?
See, this is really an interesting question. See, when you get this big ticket contracts in ship repair, then with the same facility you can do much more. But then to get the big ticket, there are not many in the market. So we have been fairly lucky in getting Vikramaditya this year because the planned schedule of Vikramaditya was next year. But due to some set of reasons, they've advanced it from the next fiscal to this year. So that is why we are getting this, and we can handle this without any issues because we are talking a contract value of upwards of 500 crore rupees on just that project, and that coming in about 4 months' time in the dock. So that's why this upward guidance is coming on ship repair, and we can handle it pretty comfortably.
Any aircraft carrier coming for major repairs in FY20, or then we can see some drop in those revenues because again you will do more vessels and the average ticket size of that execution will be less than what we'll see in FY20.
So this is again something that is bugging us also, but the good part would be FY21 we will again see a big ticket vessel coming in. The FY20, we are sensing two major potential. I can't disclose this now, and it's not in the defense space, but it's equally big, and we are in discussions on that stage. So if we can turn that around, then we can seamlessly move. So this year, FY18, now FY19, we'll have Vikramaditya. Next year, if we can swing the contracts which we are talking, then that will also take us well. And then FY21, we can get the aircraft carrier back again here because that's again a scheduled work. In the in-between one, we are also getting some good feelers from the defense, what we call weapons platforms. If we can swing a weapons platform, then I think we should be able to sustain this continuity. But I should be able to come back to you on this in maybe 3 to 6 months' time.
And on the capex front, I mean, how much outgo are we expecting in 19 and 20 based on our schedule?
495. No, 495 was on
total.
So how much are we committing? It's going to be more than that. 495 is what we are committed to the government. See, we have officially committed 495 crores. You should safely take it at somewhere around the 600 crores. We will confirm this when we do what we call our revised estimates in September. But 495 is for sure.
Thank you. The next question is on the line of Deepak Agarwal from Elara Capital. Please go ahead.
Congrats for a good set of numbers, sir.
Thank you.
Can you help us understand how will the revenue recognition profile for the Corvette? Like as you mentioned, 18 months would be for the design, but then how going beyond that? Usually, how many years it will take to recognize the full asset?
I don't have that exact details in front of me, but I'll try to guide you on this. See, 3 months from now, let's say we have the contract. 18 months from there, we have the steel cutting starting.
Yeah.
So that takes us into 21 months from. So 18 months is over on the contractual part. The first vessel is to be delivered in 42 months.
Okay.
So from the 18th month till the 42nd month, let's say the cost of one vessel, if we just spread out in 5 installments, and that is a fairly balanced installment. If you try to just pan it out, you'll get some figures. And then once the first vessel gets delivered in the 42nd month, the second vessel has to be delivered in the 48th month. So it's 6 months intervals. Subsequent vessels will come in. So what we do internally is like we have this here, but I'm not having it right in front of me. We have 8 bars overlapping each other, where the tails of the bars would be 6 months separated.
Okay.
So if you can give us some more time, and if you can just touch base with us, maybe after 10 days, we can give you a better indication on how this would pan out.
Okay. And usually this will be a costless contract?
No, there is a fixed price contract. Because this is come on a tender, there is a fixed price contract.
Okay. And my second question is, like you mentioned about the, initial opening remarks in terms of the overall other opportunities that you are seeing from MHA and for IWI. Now, beyond these 2 customers, which are your potential targets, which we can expect to get inflows for FY19-20?
See, right now, we are in the talking stage. So I'm not in a position to convey anything strongly at this stage. So because whatever you are saying, like IWI and MHA, these are all, let's put it, this all, the MHA would be about 400 crores. The IWI, what we have signed is just 100 crores, small vessels. But why we are doing all this is we sense that this is a space which will open up. But it's not that it will open up in the next 1 year or 18 months. It is going to be one segment which we will expect as we move forward 3, 4, 5 years into from now. These are area spots which will bring in revenue, and we want to position very, very clearly in these spaces. But to understand your question clearly, are we looking at major orders outside the defense space? We are trying to work on this. We are trying to work on this towards some international clients. We are seeing some traction over there. The only negative part which I've seen is suddenly, like for a merchant vessel, steel pricing is very important. So steel pricing has really hardened, and we are surprised to see steel pricing of $850 per ton in the market, which was easily $500 to $550 at the max $600 about a year back. So about a $300 going up on a ton of steel. A mid-sized merchant vessel is about a 10,000 tons of steel, and then you can see it's a $3 million increase on the ship's price. And I would think because of this, many owners will actually put off their buying decisions, at least for some time. And this steel price is not, we were initially surprised to see this in India because of our minimum import tariffs and other things. But this price is coming in from China and from Korea also. So we're just holding back. We are trying to see whether we can get a fairly major series of shipbuilding orders, but too early days to talk at this stage.
Okay. And my last question is this new dry dock facility which you have contracted out. How much is the potential revenue one can expect in the next few years, and how long will this facility will take to come on stream?
36 months is when the facility will get completed. So the revenues are only after 3 years from now.
Thank you. The next question is from the line of Abhineet Anand from SBI Cap Securities. Please go ahead.
Yeah, thanks for the opportunity. First thing is that our new ship repair facility, what could be the revenue? What could be the revenue potential from that?
See, the new ship repair facility, what we are building in Cochin, we are expecting to target around 80 vessels when it's fully operational. And that fully operational phase, or rather the operational phase will come in 24 months from when we started construction. We started construction in October of 2017. But when we start construction, the initial couple of years, we'll not get into an 80 vessels. But when we reach 80 vessels, a rough indication from today's market pricing and today's realization point of view would be it should add up another 300 to 350 crores of turnover.
Okay. And will that have the ability to take large vessels like...
No, it's actually a medium-sized facility. The largest size of the ship would be 130 meter long. But that would be that facility will actually dovetail into our present facility. In our present facility, on a year, we are doing at least a 45 to 50 mid-sized vessels. So all these mid-sized vessels we are planning to shift to the new facility, and the capacity that gets released in our main facility, we can actually go in for the larger size vessels. So this is because it's being handled under the same division, and it's seamlessly going to be operated in Cochin. So it is just an extension of whatever we have here.
Thank you. The next question is from the line of Rishabh Bothra from Sharekhan. Please go ahead.
Good afternoon, sir. Congratulations for a good set of numbers.
Thank you.
Just 2-3 things. What is our order book in terms of government and private, and are there any international players also for which we have bagged orders?
Right now, the entire order book is Indian. And within this also, the entire order book is government.
Okay. And in terms of number of ships, as on date, what are the number of ships available in India, and which could be either obsolete or discarded and bought for repairs, if possible, industry-wide?
I don't have that kind of a figure, but the general feel, since you're talking from the ship repair point of view, the general feel, people have gathered various inputs, and this is all more than the number of ships, like it's the revenue potential. And we have seen figures of 2,500 to 3,500 crores and even more floating in the market. But we feel 2.5 to 3.5 is actually a possible figure in the country. And so that's why we are pretty upbeat on ship repair, and we are trying to do things in Mumbai and Calcutta.
And sir, on this regards only, how is our manpower like if we want to scale up this business? How is the manpower availability?
See, manpower is not a problem. We have skilled manpower. So the challenge would be, you're aware that we have gone through an accident in Cochin Shipyard. So the challenge would be to bring in robust systems and have manpower who are trained and who are culturally at a certain level that you can work safe, at the same time produce more. Okay. So manpower per se, from the skill set point of view, we are comfortable.
Okay. Thanks a lot, sir. In case further question, I will come back. Sir.
Thank you. The next question is on the line of Sagar Gandhi from ICICI Securities. Please go ahead.
Sir, congratulations on a good set of numbers.
Thanks,
sir, what would be the free cash of the 3,500 crores that is there in our balance sheet in FY18? What I mean is how much it would be from advances from customers, and how much would be total free cash?
The total cash position is around 3,050 crores. Out of that, around 500 crores will be customer money.
So, rest 2,500 crores is totally free cash?
Yeah.
It's part of it is committed towards because the two expansion projects, because that includes also a part of the money we have raised from the IPO. So there are commitments towards it, but it's actually free cash. But there are commitments.
Okay, sir. And, sir, can you also give us a sense about the opportunity which can flow to Cochin Shipyard for repairing of oil rigs, given the fact that oil prices have globally moved up?
This is exactly what we are looking at, and we feel there is a potential here. Because if oil can remain steady at 90 levels, then I think we will see potential. there is already some requirements in ONGC, and where some other players in India have badly let them down. So there are some discussions happening here, but there are challenges also. But we have played this market very strongly about 10 years back, and today we have one drill ship in the company, which was going extremely well, and we handled that project extremely well, but then this unfortunate accident happened on that particular vessel. But we still have good relations and good connections inside ONGC. So we will first try to see what would be ONGC's requirement, and then probably try to reach out towards the international market.
Sir, because this was not an opportunity 2 or 3 years down the line.
Exactly.
Open, new ship repair revenues in FY19 and FY20. So can we see some more upside on this 800 crore figure that you have given us or guided us?
See, the thing is, we may not see an upside on the rig repair business. See, there are two reasons here. One is technical, and the other one is from a logistical point of view. See, our present dry docks, what we have, we are not in a position to take a rig inside the dry dock and dock it. It doesn't have the breadth. While we are one of the largest dry dock in the country, we are at 44 meters. That's not good enough. The new dry dock which we are building, this is exactly what we are targeting, because at the mouth of the dry dock, we are putting it at 75 meters, which can take in practically 90% of the rigs worldwide. So, but you know that dry dock is coming up 36 months hence. So our sights were on building up that business back by the time the new dry dock is coming up. But as you rightly said, since there's a hardening up of the oil price right now, if we see opportunities, and I'm telling you, like, we are seeing at least a couple of opportunities in India where the rig need not be dry docked, the rig can be jacked up, as they say. So if the opportunities where a rig can be jacked up and the work can be done, we will definitely look at that. There are 2 projects which are already under discussion, but I'm not in a position to say whether that can be concluded or not, because it's not just from our point of view, it's also from the ONGC's point of view, whether they would actually do that project.
Thank you. Before we move to the next question, I'd like to remind our participants to restrict their question to 2 per participant. If time permits, may join the question queue for any follow-ups. Thank you. The next question is from the line of Jonas Bhutta from Phillip Capital. Please go ahead.
Hello. Some more follow-ups. So basically, sir, I missed out on the number that you gave out on revenue expectations from the Mumbai Port Trust JV, if any, in FY19. Did you give any particular?
I mentioned about the 75 crore. And
in year 1 itself?
In year 1. See, we expect to get going early part of September. If that gets pushed in a little bit, then I will come back and revise that a little bit downward. But otherwise, about the 75 crore is what we are looking at.
Okay, and the Hooghly and the Calcutta properties would not contribute to revenues, at least in FY19?
It will not. It will not.
And this Mumbai, the 75 crores in F19 could easily be doubled in F20? So, since that you only have half-year operations, so is it like annualized?
FY19, if we can actually get going from September mid and do about the 75 crores, yes, the target is to double it up in the next year.
Okay, my second question was more on the numbers. I noticed that our other income for the quarter has declined despite having higher cash balance than last year, from 45 crores to 38 crores. Any particular reason why that has happened?
Jose, can you explain that?
Basically, the cash has started utilizing for the capex. That is one reason. Then the interest rate has also come down.
Have you?
Because even sequentially, it's a very large drop, and yeah.
And I think the one accounting treatment difference is also there, because earlier what we used to do is that while making the provisions for an expenditure, that will be mentioned as the line item in the expenditure side. But suppose that if there is a reversal of that provision, that we used to credit in the other income. From this year onwards, we have started netting it off and showing it in the expenditure side. So, am I clear?
Yes, sir. And so just repeating one more question an earlier participant asked on the gratuity, sir, the note to account 7.
Yeah.
That 12 crore number, all of that has been provided in the fourth quarter itself, right? Which is why our employee cost is growth against the normal run rate. And this is one-off in nature, so this will not recur.
Because the gratuity has been increased from 10 lakhs to 20 lakhs now. That has come recently. So we have provided for that based on the actual valuation fully.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Hello. Are we planning to grow in current year by 12%? Is it correct?
Pardon, can you just repeat that question?
In current year, we are planning to grow by 12% in top line. It is correct one?
That's right.
And sir, you had given in your SP some capex plan 970 crore, 1,800 crore, 1,300 crore.
Correct.
So can you tell us how many months it will take for 970 crore?
See, the 970 crore is a 24-month project. And that project started in October 2017. So 24 months from October 2017.
Thank you.
And the second project is 1,800 crore project. We have just awarded the contract now. So you say from this month, the next 36 months. That is the pan out for the 1,800 crore.
Thank you. The next question from the line of Harish Biyani from SBI Mutual Fund. Please go ahead.
Hi, sir. Thanks. Apologies, I could not answer the question earlier. Sir, on the IAC, so in the presentation, the balance orders in hand is 767 crores. Correct?
Yeah, that's on the phase 2 part of it. Correct.
So, when are we going to sign phase 3, sir?
See, I don't have an exact date, but in all probability between December 2018 to March 2019.
Okay. And sir, till then, how does it work out? So, because we'll be doing some part of the contract, is it that only this particular portion is something that we focus on? If I recall, the last time similar issue happened, we continued to kind of bill.
Correct.
We continued to book, but we could not bill, and then there was some shortfall which was made up later in a later year.
Exactly. Yeah.
Is that something that we are looking at this year?
Last time what was happening is we were building and we were not billing, because especially there was last time there was no overall budgetary approval, so that is why that issue happened. This time we will build and we have to bill also. So it's actually important that we conclude the contract this financial year, because otherwise we'll have a little bit of a difficulty in this billing aspect, getting into Q1 of next year. And we will, in all probability, between us and the Navy, when last week I was in Delhi, so the Navy also wants it faster. Both of us don't want to make a mistake, that's all. Otherwise, there's no difference of opinion. So the discussions final cost discussions would start actually as early as in a month's time.
Thank you. The next question is from the line of Giriraj Daga from K.M. Vasaria Family Trust. Please go ahead.
Yeah, just a few follow-ups there. First, in terms of the 30 crore of provisioning, is it related to the commercial part of it? That's the first question of it. Second, in terms of 12% growth, are we talking about the complete company or only the ship repair part of it? That's the second part. And just a small clarification, this IAC 767 crore is only the fixed cost, or is only include the cost plus also?
IAC that balance, just a minute, in the presentation, that balance what we are showing is the fixed price part. The balance is the fixed price part only.
So cost to be separate over and above it?
Cost plus whatever is being procured, that would be over and above this. And your question was 12%. We are talking, we are guiding for the overall top line for the company.
Okay, and the 30 crore is for the commercial?
Jose, can you explain this?
That around 50% is from the defense.
Defense means government organization.
Yeah.
See, actually what is happening is like, just a minute, and correct me if I'm wrong.
Yeah.
We have outstanding from the Navy, there's something from the Coast Guard. These are all outstanding on the repair side. We hope, see, there are some long-drawn discussions. We are also not pushing them too hard because they are valuable clients on the other side. So we are taking it through a long rope. We don't push anything into arbitration or other thing. We take it through the ministry. We take it directly. So we give it a long rope. But when we give it a long rope, it crosses 1 year, 2 year, and certain have got into the third year. So we have to make provisioning for that. That is what has happened here.
Thank you. The next question is from the line of Qtr4 from Quest Investment. Please go ahead.
Yeah, hi. Thank you for this opportunity. So just one question. I wanted to check the order that we are having from Andaman Nicobar. Is the steel cost also a pass-through in that?
Steel cost is not a pass-through, but the good part is we have actually, all the steel came in at the earlier pricing, but there has been a last minute, like, we are building 2 500 packs vessels, which is completely fabricated in the company, so that steel is finished. There are 2 1,200 packs vessels on which each ship is consuming about 4,600 tons. So that's, so you say roughly including margins, we are ordering around 11,000 tons of steel. Out of 11,000 tons of steel, we have ordered practically everything, but then about 1,200 tons we have recently ordered, and we got hit on that. That is at this higher price.
Okay. And the IOC order, is the steel a pass-through there?
IOC order, there is no steel work. It's all finished. The steel is all completed. And that was a pass-through. That was a pass-through.
Thank you. We have the follow-up question from the line of Harish Biyani from SBI Mutual Fund. Please go ahead.
Hello.
Yeah.
So I have 2 questions before I get disconnected by the moderator. One is on Corvette. If you can just help us with how is the pass-through in terms of the cost? So all the cost inflation. So is this a fixed price contract or a?
It's a fixed price contract. It's a fixed price contract. So it's all the normal how we approach a commercial project. We need to do discussions and fix the pricing. Generally confident that we should be able to handle it. The steel price increase will have an impact. That's the only solace here is that the steel price, the steel is not much. There's a very light vessel. There is a little bit of a concern which would be Forex because there is no Forex variation on this project, and you've seen like what has happened to the Forex. So there is a bit of a challenge for us to handle on the equipment procurement part. The good part is, again, off the record, we have 8 vessels. We have government shipbuilders with 8 vessels, and we are talking together, and we will most probably approach the market for equipment procurement for 16 ships together. So we should be able to beat down the pricing a little bit.
And apart from steel and Forex, are there any other critical variables that one should watch out for?
Nothing.
In terms of
we have other things under control. Steel again, it's very, very minimal steel. So steel, see this impact of around $250 to $300 we are seeing in the steel price. Yes, it definitely has an impact, but then that impact is, let's put it, it's more controllable. Forex is more of a concern for us.
And we should look at this project more as a kind of a entry-level strategy into the defense market rather than something which is going to make us a lot of profit. It's a big project, 6,000 crores. So the advantage is it helps us leveling resources, and we can actually, like, we look at it the other way around. Like, if we didn't have this project, we would have seen bumping up of overheads on something else. So this project actually takes the broad part of it. And we always do this, like margins definitely is on the lower side on this. And last question, sir, IAC2, how should we think about it? Too early, where is it in the overall stage, drawing stage, or where is it right now, sir?
We haven't, really nothing much has moved because the government has also not talked too much on this. But our understanding is the Navy is pushing strongly on this, but I think it's too early to talk.
Sure. Okay. Thanks so much, sir. Appreciate
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
Thank you, everyone, for very closely following Cochin Shipyard, and we hope we have been able to do justice towards the market, towards the investors who have put their faith and put their money in our IPO, and this being the first results. We are also clear that there would be some benchmarks and there would be some takeaways people like you would actually present before the investors. From our side, we are trying to be as transparent as possible. Concerns will be addressed as we move forward. The guidance is what we normally give. We would like to err on the conservative side, and we hope to keep you posted on a quarter-to-quarter basis as we move forward. But again, I need your kind understanding that this is not a quarter-to-quarter company, though we will come out with quarter-to-quarter information. And I've noted that the market, at least the media takes it as a quarter-to-quarter, but I'm sure that unless at your level you understand and you would be with us when we say that please look at us from a bit more long-term basis. And the shortest term analysis should be at least a year-on-year basis. So with that, thank you very much for being with us, and we shall stay engaged. And anytime somebody would want to come over and see the shipyard and see what's happening here, we have Concept who can coordinate all those visits to the shipyard. Thank you.
Thank you very much.